Hey there, Tiffany Thomas with WealthyTiffany.com, and in today's video we're going to be talking about robo-advisors and if they are worth it or not. There are a lot of robo-advisors out there. For example, there's Wealthfront, Betterment, M1 Finance, Personal Capital, Acorns, just to name a few, and there's a lot that I didn't name. Let's first define what a robo-advisor is. A robo-advisor is a website or an app that uses a computer algorithm to invest your money for you based on a list of questions about your investing preference and your investing goals and your risk tolerance. And once they have that information, then they provide you with an asset allocation on where your money should be going, whether that's into stocks or into bonds or even both. They usually use ETFs, exchange traded funds, to invest your money in the stock market. And if you're not sure what an ETF is, I do have another video on that, so I will leave a link to that video and you can check that out for more information about an ETF. With robo-advisors, they're more automated and there's less human connection. And I get that there are some robo-advisors out there that offer an extra service to have that human interaction where you can ask questions to a human and they can answer you about your investments, but not all of them provide that option, and there's usually a cost associated with a robo-advisor. And yes, that cost is less than working with a financial advisor one-on-one, but that's actually reason number one why I don't think most robo-advisors are worth it, because there is a cost associated with using a robo-advisor. A lot of robo-advisors seem to charge anywhere from 0.25% all the way up to almost 1% to invest your money with them. And to me, that's a really high cost that you're paying just to have someone automatically invest your money. And where they are using these ETFs, they're actually, most of them are Vanguard ETFs, and you could do that on your own. I can do that on my own and not have to pay that extra cost. And just to give you an example, one of Vanguard's ETFs is the Vanguard Total Stock Market ETF. It's abbreviated VTI. And this ETF only costs 0.03% to invest your money in. And when you are using a robo-advisor, you're paying that, we'll just go with 0.25%. That seems to be a pretty popular amount. You're paying that 0.25% to invest in that Vanguard fund, which is only a 0.03% expense ratio. And you're also paying that expense ratio when you're investing with a robo-advisor. That does not get waived. So essentially, you're paying more than 8 times as much to invest with a robo-advisor in this fund. And to me, that's not really worth it. Paying 8 times the amount to invest in a fund that I can simply invest in myself, and it honestly doesn't take that much time to do it. I can see if you want to spend zero time, you have zero interest in figuring out how to invest your own money, but even if you just spend 10 minutes, and maybe that's even 10 minutes a year, I don't know, you can set this on autopilot pretty much. So just spending that little bit of time, you can really see a higher return on your money. And I want to share an example with you so you can see exactly how much this really affects your money. So let's say you have $10,000 in your savings account right now, and you want to invest $1,000 a month, we'll say, so $12,000 a year. And let's put it into this fund, this VTI ETF, yeah, lots of letters here. The Vanguard Total Stock Market ETF. And let's just say this returned 8% each year, which is the average return for the stock market. And let's say you wanted to invest it for 25 years. And you can see our ending balance, if we were just to pay the 0.03%, expense ratio with this ETF is going to be just over $1 million. But if we were to use this robo-advisor and be charged that 0.25% charge on our money, then we would not have quite $1 million in our investments. And you can see that that's about $40,000 less, which is a yearly salary for quite a lot of people. So that's a significant amount of money that is essentially going to waste, because you can honestly invest very simply on your own just by taking a little amount of time. You guys, it really doesn't take that much time. I have plenty of videos on how to invest simply. But if you just take that little bit of time, you can have that extra year, that $40,000 to invest that money or retire a year early. How great would that be? There's a lot of things you can do in 1 year. So the cost of using a robo-advisor is really the number one reason that I wouldn't use one. And I get that there are some that are free. So if you are really interested in a robo-advisor, find one that is free. And another thing to mention is that the costs seem to continue to rise with these robo-advisors over time. I know that Betterment, for example, they used to have a lower cost to invest with them, and they have raised that. And just to quote their CEO, he says, "We're preparing for the long haul as always, and we aim to make this a public company, the first large public financial services company," which seems like a positive, but in actuality, when a company goes public, it's no longer about the people they're serving, it's about making money, and they do that by increasing fees. That's one way they do that. Sure, there are other ways, but they're a business, and they're going to want to make money. And you can see that they've already raised their fees once. Who's to say they won't do it again? So cost is a really big factor when you are looking at robo-advisors, because I've said this multiple times before, because when you are investing, you want to keep your fees and your costs as low as possible so that you can have the majority of your money working for you and not going towards someone else. And the second reason that I don't really love robo-advisors is because they are investing in things that I can invest in myself. They don't have special funds or ETFs that I wouldn't have access to, or even individual stocks. So they are choosing investments that I already have access to that I can invest on my own for a lesser amount, a less expensive amount. And if you take a look at the different websites, and I can show you Betterment, they actually show on here that most of their ETFs they're using are Vanguard ETFs, which is actually what I invest in. I have an account at Vanguard and invest in the Vanguard Total Stock Market ETF. So I already am investing in things that they're going to be investing in. So it doesn't really make sense for me to pay that extra fee to have someone else do what I can already do. Reason number 3 that I don't really love robo-advisors is because they promote this tax loss harvesting. And essentially what that is when you have an investment, you have a stock or an ETF, and the price has gone down from what you paid for it, then they will sell that investment for you and take a loss, and then you can deduct that on your taxes, and then they will buy a similar ETF or stock so that your money is still invested, but you can take that loss sooner rather than waiting over time. And while tax loss harvesting can be a good thing, I really don't see that outweighing the cost of using a robo-advisor. You have to pay that cost, that 0.25%, for example, but yet, depending on the market, this may not be to your advantage to do the tax loss harvesting. So when you're required to pay that cost, but yet you don't have a guarantee on the return that you're getting on this tax loss harvesting, that doesn't really seem to be a win for me, because there's no guarantee that that's really going to offset that cost that you're paying. And you can also do this on your own if you wanted to. Of course, it would take a little extra time, but you can definitely still do this on your own. That's just something to think about, the actual cost that you're paying, and then are you really getting a return on your investment that is going to be worth it? And then reason number 4 that I don't really love robo-advisors is because I want to invest my money when I want to invest it. And I get that people want to use a robo-advisor and just have it all automated for them. But I just want to give you an example. When the stock market took a dip, and this was during Brexit, I don't know if you guys have heard of that, but one of the robo-advisor companies had frozen their trading when this happened. And they were saying they didn't want people to get nervous and start selling all of their investments at a loss, but yet they weren't able to purchase these investments when the prices were so low. And I really like having that freedom. If there's something that I can take advantage of in the stock market at a certain time, then I want to be able to do that. I don't want someone else to regulate that and say, no, sorry, you can't take advantage of that. And also, if there is a stock or an ETF that I feel like it's going to be a lower price at the beginning of the day, then I want to make that purchase right then, rather than waiting until the end of the day to make that purchase if I think the price is going to be higher. And that may not matter to some people, but I just like having that freedom and that knowledge that if I want to make an investment at a certain time, then I'm going to be able to do that. And no one can tell me not to do that or stop me from doing that. And I know that at least one of the companies, M1 Finance, they only do trading at one time during the day, instead of exactly when you want to make your trade, to either buy or to sell. So I don't really love not having that freedom. So these are just a few of the reasons that I don't really care for robo-advisors. That being said, I get that people want it all automated and they don't want to think about it at all. They don't want to take just a little bit of time to understand investing. So if that is the case, then pick a robo-advisor that is free, that doesn't have a cost associated with it, and go ahead and get started, because getting started is better than doing nothing, than not investing your money at all. I personally just like keeping my fees as low as possible with my investments, and I like having the freedom of investing in what I want to, when I want to, and you can't really do that with robo-advisors. Some of you may already be using a robo-advisor, and if you are, then comment below which robo-advisor you are using, because I'm curious to know which one people are using. If you guys found this video helpful, please hit the like button and share it with someone else who would like to hear this information. And please hit the subscribe button to subscribe to my YouTube channel. That will really help me out and we can get this content out to more people. And as a side note, if you are interested in getting 2 free stocks, which is a really easy way to get started investing, Webull is doing a promotion right now that if you set up an account, which is free, then you get 1 free stock, and if you deposit at least $100 into the account, you'll get a second free stock valued up to $1,400. So I will leave my referral link below, and you can click on that to set up an account and get your 2 free stocks and get your feet wet with investing. This is a really great way to do that. Thanks so much for watching, and I'll see you guys in the next video.